What the fuck?
Yeah, it's pretty live again for some reason. Boris Michel is live now. I got a notification that we're live.
Yes,
but
now it should be live.
okay. Hopefully.
Welcome, everyone. We will start everything from the beginning now that it actually works. Boris, welcome to this now live session on on the American approach to Eastern European venture.
Yeah, hello. Good to see everyone. Not see, but good to that you see us.
Yes, and I will let everyone just know some housekeeping. You can at all times throughout this session ask questions in the comment section. We are seeing it and can pull it up on the screen as well for everyone to see. So please do jump into the event and comment with us. That is always what makes for the most interactive session. So it would be great if you would. And secondly, let me just do a couple of notes on why we are assembled here and why we thought it was worthwhile talking about the American approach to Eastern Europe. And of course, we're doing that because we think that there is something for the European ecosystem to learn and adapt to when it comes to the US style of investing. I will not put those words in the mouth of Boris because it might be something that some people would take offense with. So I will be the one who is responsible for saying so. And everyone, feel free to shoot me down in the comments if you think I'm wrong. But Boris, let me pull up this slide and then ask you the question that I asked you just before when we were partly live on some channels and not on others. Boris, you are starting your slide deck with this page that says SMOK Ventures and Bridging Silicon Valley to Emerging Europe. Could you just try and get me to understand why is it that you are saying it like that?
Well, first of all, it's a good phrase, right? It brings attention, so that's always good. It's also true, which helps. We are an American fund with 2 partners in the US, 2 partners here in Eastern Europe, and our approach, at least what we feel, that our approach is more of that approach from the American VCs versus the kind of old-fashioned approach of the specifically, European, Eastern European venture capitalists that I had to deal with when I was an entrepreneur 10 years ago. And part of the reason we actually launched that is to change the ecosystem here. So it's a Dutch fund, to be frank, but I think the approach that we kind of present and how we treat the founders, how we kind of add value, is more taken from the history of Silicon Valley and Paul Bragiel and Dan Bragiel, who inspired us to launch this fund in Central Eastern Europe.
Yeah, and we're going to talk much more about that. First, I wanted to say we're also here to because EUVC loves SMOK Ventures, and I thought, how will I best transfer this message to our audience? And when I first spoke to Boris about doing this webinar, and then I said, well, I actually think that it is this part about the American approach to Eastern Europe, because if there's something that I should say about the way that you act, it is that I'm actually seeing at least the best practice part of US VC being brought over here to Europe, and that is what we're going to be diving much more into. But Boris, you started on your story before, and I would just give you the opportunity to share a few more words there, because I think that there's an incredibly important part in saying that this is from founders to founders, because that is part of the approach in SMOK that we have not seen that much of in Europe until very recently.
Well, that's correct. Like, I was so frustrated when I was an early stage founder, pre-seed founder. I had some ideas. I was an engineer and trying to figure out what to do, and I had some good ideas, but I didn't have amazing traction. I didn't have any unit economics yet. And I started talking to angel investors and to VC funds back in 2009, 2010, when I was fundraising for my first startup. And it was very depressing because the guys I talked to, mostly guys, were financial people, and they asked me questions about the Excel more and about the about stuff that they knew about, and they didn't talk about stuff that was really important in the pre-seed investing. So they didn't try to understand why I'm doing that. They didn't try to understand what I see in this market that's different. That's different to other founders. They were so obsessed with the numbers, and they basically wouldn't even invest actually early stage. So it was a waste of time. And before I kind of talked only in Eastern Europe, I was, I almost gave up on this idea because I was like, no one's gonna see the value. And then once I didn't go to I did go to the US to pitch investors, but I found investors in the UK, and the approach in the UK was just way different. It was like, oh my God, you're a smart founder who has an idea, who's trying to disrupt some market. Here is 25K, here is 100K. Try to prove to us, and now come back in a year and show us what you've done, and maybe then we can put a proper round. You can, now you should have already some numbers, and you should know what you're doing. But before that, it's more about the founder, the approach. So I was, and for about the last 10 years, there wasn't really a lot of people that I could talk to that had the money, that could be investing money in Eastern Europe, that actually had an experience of founding a company. So, once I managed to go through my whole path from engineer to entrepreneur, to sell my company, then to kind of serve my vesting period so that everything is legal and fine, then the natural next thing for me was to go back to my original kind of idea, to actually help those entrepreneurs find a partner that understands them, because a lot of times that's what the founders need. They want someone who can be a coach, can be someone like a mentor, someone who they can trust because they know went through this before. And I'm really happy to see that it's not just us, in Central Eastern Europe. There's been a number of early stage funds recently popping up that have that were funded by ex entrepreneurs, and I think that's what especially in early stage, that's what the founders are looking for more.
Yeah, and we're going to talk much more about the style, because that's going to be the overarching theme, because I think that is definitely part of it. But there's also just a bit around your strategy that I'd love for you to dive a bit more into, because your strategy isn't so. Of course, when you invest, there's two parts of it, right? Or there's multiple. There's of course the style and how you think about being founder friendly and so on and so forth. But there's also the investment strategy that you employ, and for SMOK, I do believe that's a different than what you might have called the old guard, because I think that you are taking more shots on goal than some of the funds that you would have seen before, and that of course means that you're also allowed to make make more mistakes, and that gives a entirely different approach to venture, as to a firm that is much more concentrated and wants every single bet to yield at least 2x, or at least in that neighborhood. So tell us a bit about that.
A lot of investors, I've been talking, as a Polish guy, I've been talking to people, most of the people I talk to are from the region, from Poland, from Czechia, from Romania, from all those countries. And what I'm hearing from investors all the time is that, like, the words like it's too risky, or what if something happens? So they're trying always to optimize for not losing the money. So to save for the downside. So just to make sure that the money they invest, reasonably so, their investors are very often people who are very risk averse. They don't want to be losing money. No one wants to be losing money. But I think the approach that they have with only betting on the safe horses, it's counterintuitive, but it doesn't really allow them to hit big. It doesn't really allow them to bring really big returns to the funds. So our approach is very much inspired by what Paul and Dan has been doing forever for the last 20 years. Maybe it's easier for us to be a bit more risky and optimizing more from the upside versus the downside, seeing that our partners have done this for the last 20 years and they won big again and again. Every year, they bet on about one unicorn per year for the last 15 years. They got to about 15, and they were able to, and they had a lot of losses, of course, but those 15, $100 billion plus companies, made it work for them. So the economics work for them. In Poland, in Eastern Europe, there hasn't been that many wins over the last 20 years. So a lot of people are like, hey, where are those unicorns? We're like, how can we be optimizing for upside if it's then just been like a few in every country? And what I'm saying is, yes, sure, that's the case, but have a look at what happened in the last 10 years. How many companies were created in Estonia, in Poland, in Romania, and how many people are now leaving those companies. So there has been a few of those successful companies already, and we feel that this is the time where more and more of those companies will be created. So you cannot look at the past and predict the future. I think you have to look at how the other ecosystems evolve, like Silicon Valley, like Singapore, a lot of other, and that's how we kind of have this optimistic approach to say, sure, we're gonna lose a lot of bets. We're gonna do a lot of stupid investments early stages. We're gonna be betting on some crazy technology, but 2 or 3 of those will make it work, will return the fund for us, and we just need 2 or 3 of those to get a 2 or 3x return on the fund, which is not a bad return. Of course, we aiming at bigger returns than just that. So that's our, it's just a way of thinking, that optimizing for upside versus optimizing for downside, and just to make sure all our investors are also, with us on that. That's what
and I think to me there's 2 points that should be put into that equation as well. One is, the whole counterfactual argument that you described with, well, there hasn't been any large companies or large successes, so for that reason you can't run that strategy here. But then, if there's no one running that strategy, there's not going to be any founders funded with the moonshot ideas, because everyone is going to look at them and think you got to be ludicrous. So in that sense, it's a bit of a self-serving argument if the whole ecosystem is saying you need to play a game that has a pretty solid chance of at least making its money back, right? So you need venture investors that are really, really ready to take the big swings for you to also get those knockout successes. They don't come from someone being bootstrapped, because it's not typically not doable to bootstrap that type of company and then win. And it's not doable to build the technology if there's no one ready to fund the technology. So it is a self-serving argument if you end up in that spiral of saying, well, there hasn't been any of those types of companies in our country yet, so you can't have that type of venture investor. I'd say that there's always moonshot ideas. The question is if there's moonshot investors to fund them. Another part, Boris, is also, and I'd love for you to talk a bit to that, because you're definitely more qualified than me. That is the effect on the ecosystem, and especially the founders, with regards to terms that you're dragging around or that you're throwing around, whether you're playing one game or the other. Because of course, as you said, if you're optimized for upside, you're interested in something else than if you're optimizing for a very low downside.
Yeah, I mean, I've been seeing, especially, I think that's an Eastern European thing. I've been seeing, for example, a lot of investors who call themselves venture builders versus venture capitalists, and their approach is that they own a majority of or a big chunk of a company once they fund this company. So with their approach, which is an equally good approach, don't take me wrong. There's nothing wrong with that approach, but they can still be making good money, from that approach. But that approach kind of implies that you will not be raising a lot of funding. So we'll need to get to revenue very quickly. And then you will not, you probably won't get on that high growth path, because the high growth path requires a lot of funding, and a lot of funding requires investors who will be putting money into the company. No one's putting money in a company that's owned by a software house or that's owned by an agency. So just by defining it at a cap table of your company this way, you'll limit yourself from the upside. You probably protect the downside, because those companies are usually run by people who really understand one industry. Like, for example, there's e-commerce studio that just launches a lot of e-commerce services. They're really good at that, and they know how to spin off those companies. But they won't be. I wouldn't be investing in those companies just because the upside is kind of low. So I think that's the approach of that I've seen a lot. So once you make a decision that you want to build something big and global, which usually means that you don't target your local market, whether you're in Moldova or in Albania or in Czechia or Poland or Ukraine, you mostly want to target big markets, because there is about the same amount of work that you need to launch in the US versus launch in Poland, but the upside is just improportional. It's easier to launch in Poland if you're Polish. It's easier to launch in Romania if you're Romanian, because you know the people, they know you, you're validated, but it doesn't really validate your idea in other countries. So that's the kind of, if you make this reasonable choice, unreasonable choice is actually to try to build something that's big and global and the winner in this, like in the whole industry globally, then let's talk. If you kind of want to play it safe, if you want to bootstrap, or if you want to just race to the local founders and build something sustainable, that is like, it even sounds really good, but it's just not something that I would be looking into. I could be supporting you, maybe I could even throw an angel ticket, but I wouldn't be investing as a VC fund.
Yeah, and I think that there's two important points there. One is what you just said with throw an angel ticket, right? That's what, for the founders listening in, that's definitely worthwhile remembering, that it's not a value judgment that a VC doesn't want to invest necessarily. It's just a fit question. So you might be perfectly fit for an angel investment, but just not for a venture investment. I think that's an important point. And then also, and you said that earlier as well, for anyone listening in thinking about investing into venture funds, you definitely want to make sure that the venture funds you're investing in have the profile that you want. And I personally think that the approach of going for the moonshot ideas is that's what characterizes venture. And if you do anything else but that, then you're maybe more of a private equity style house that's then also investing into somewhat early companies. But I think that's worthwhile to saying, there's two important things here to remember on both sides, whether you're an LP or a founder. I pulled up a slide here that I wanted to just also emphasize to everyone, that when they're looking at this, there's some important metrics for you to see that you should be evaluating any VC on when you're meeting them, whether that's as a founder or as an LP or as a co-investor. And that is the follow-on funding is super important metric, because that's what VC is in the end. You need to get follow-on funding for the company to grow. It's an early metric, if not even leading indicator of the fact that this VC's portfolio is likely going to end up with some of the home run successes. And same thing when you look at the valuation growth, because that's the expression of that. And then as we just said, the part with SMOK Ventures taking more bets on or shots on goal than the average VC fund in Europe or in Central Eastern Europe, that is also what quickly leads someone like SMOK to become the most active one. So that's also a good correlation there, that the better VC funds are typically also the ones that are placing more bets. I don't know if you want to comment on that, but that's at least my little analysis here.
It's we feel comfortable investing 100K into an idea from two smart people who we just feel can change the world or change something, a small part of the world, but that used to be enough for us, and that used to be enough for those small funds. And it actually used to be a really good idea to run those small funds, 5 million to 10 million funds, because there was always people to put more money later on. Nowadays, one of the reasons we actually decided that the second fund is going to be a bit bigger was that we're seeing a shift of the market. We're seeing that it's harder to acquire funding. It's harder to, so if we do a bet on a team, we really want to reserve some of the money for follow-on investment in the team, because sometimes it's just things take longer. Very often, like the company needs to pivot, and those investors who are on board usually know the best whether the team made enough, if they did everything to get to a point, or how close they are really to this inflection point when it kind of starts growing really fast. So it's kind of hard to go to new investors and say, hey, we got this funding, we achieved this and that, but it's not yet growing as fast as everyone's like, oh yeah, let's talk in half a year once you get to that point. And obviously they won't, because they run out of funding and go bust. So that's why I think in the changing environment of venture capital, now it's going to be actually more important that the fund can put more money into the company. A lot of founders actually ask me explicitly, like, hey, we do an early stage round. Will you be supporting us if we, if everything looks good, but we still need that half a year to get to break even? And a lot of smaller funds will have a problem with that. Not saying, obviously they can still make good returns, but
we come from a period where we didn't have much of what you'd call fundraising risk or capital risk, in the sense that if the company did well, it would get funded in the next round. In down markets, bear markets like the ones we're in right now, that's definitely not the case. And for that reason, we're seeing many funds shifting their allocation strategy a bit so that there's more for reserves. And that's exactly what you just described that you've done. I wanted to shift to another point, which is also what you're seeing more for the better funds, I definitely believe, and that is that the LP base is typically quite diversified, and it is typically very sharply backed or heavily backed by founders from the ecosystem. And I'm putting up here a post from you, Boris, where you're saying both that you're happy to see many of your portfolio founders, but also many of your LPs making the list of top 40 female founders in Poland. So Boris, would you add a couple of words to that?
Yeah, just a definition, because probably a lot of people are like, who are those LPs? So the LPs are basically investors into the fund. So people who we take the money from. We invest our own money, but we also invest money from our investors. And they're called limited partners, LPs. And anyone can become an LP, actually. I mean, not anyone, but it's, it's getting easier and easier. That's a weird one. I didn't expect that.
I had to pull up that slide. Tell me, Boris, what do you mean when you then say you don't want boring LPs? Because isn't it just money? Why wouldn't you just take money from any other boring old guy?
I mean, there can be old. That's fine. I'm not an ageist. We have some, older guys. I'm not that young either. But it's interesting. A lot of founders ignore that when they fundraise. They don't even ask. Most people do not ask who our LPs are, and that would be one of my first questions when I would be fundraising now. Like, who are your investors? Because you're gonna act as a VC. You're gonna act according to what you've agreed with with your investors. So it's really important that I know that the investors are in line with the strategy, because otherwise I can be, I can be in trouble. It might be that you make a decision, but then if it's a contrarian decision, it might be that your investors control you in some way. So you need to understand how the relationship works. And it's really good to see investors who actually are like LPs who actually got involved. And in our case, I'm super excited because like most of my investors are also friends, people who I've been, building the ecosystem essentially in Europe with, people who have seen and trusted us, both with their money, but also with their network. And people who feel very confident interacting with our portfolio. Every time we do, like once a year or twice a year, we do this hangout in person, offline, where we invite our LPs and our founders. And there's been so many great connections between them. There's been people who invested on the side, not just they invest into SMOK, but they also invest into a specific founder. There's been some friendships created, a lot of networks being built, because those people are not. Almost all of those our investors are actually founders in the ecosystem, so they've went through the same path that my portfolio founders are now going through. It's super helpful. It's way more helpful. I'm not saying having financial people is not helpful, because once you get to Series B, Series C, suddenly that becomes really important. So you make sure you have those guys too, and it's good to have those guys as well. But it's as an early stage fund, most of the problems are how to get from 0 to 1, and all of those founders went from 0 to 1 at least. So it's just I think it's just the fact that it's not just three guys, actually three guys and one girl that are running this venture capital fund, but there's also 69 now. I know we're number investors who are part of us. That's helpful for the founders as well, because they know they have a bigger network of people who support them and who really want them to be successful.
Yeah. So to everyone, I don't want boring LPs. That is a quote from Boris in our podcast episode that we did with him, and of course it's super reductionist or simplist when we say boring LPs. That's not the point, that they need to be fun, but the point is that it's
they kind of do. Like
it's that it's LPs that share the vision and ambition and modus operandi with the fund manager, and the fact that you're pioneering a specific way of being an investor in the ecosystem, and I think that that's the important part, and that's also what Boris is saying. Think about that as well when you're taking money from someone, because there's both pressure from them coming, but it's also likely to be revealing as to whom the investors you're raising from actually are.
Yeah. One maybe interesting story which I just experienced last week regarding that, like who are the LPs and how it affects how the fund works. I just chatted with two guys from renowned Western European venture capital firms, and I shared with enthusiasm our latest investment into FinMap, a Ukrainian team disrupting the cash flow, providing really cool cash flow optimization and management service for medium-sized businesses. And I said, hey, this is pretty amazing, because it was really hard to sign, because one of the guys who was the co-founder was actually in the trenches fighting when they were signing. So they had to log into a Starlink to be able to sign the DocuSign. It was really good that we have this DocuSign thing, because otherwise, how on earth would he sign? And those guys were so horrified. And they were they look at me as a crazy person. I was like, why would you even do that? They couldn't even comprehend the idea of even talking to a team that has, a majority of the team back in a country that's currently at war. And I understand they're scared, especially that they're scared because they're in Western Europe. They don't understand that much the connection, how it actually works. But they're also scared because they're the risk averseness of those guys is on a different level, and they would never be able to explain to their LPs what you're doing. So to them, that's a kind of crazy, unpredictable decision to invest in a company that has that much risk. On my side, I told my LPs, Ukraine is a big part of what we are doing, and I feel that this is really gonna be a competitive advantage to us. We put 10% of the funds to be invested in Ukraine, and we haven't changed that after the war started. And I feel this is an opportunity for us. And we've already backed two teams. One is Ukrainian team, but outside of Ukraine. The other is, as FinMap is, maybe half. I understand the risk, but I understand the win as well, because obviously those terms are better. Right now, you can get into really interesting, companies. And once they keep growing, the bigger they grow, the less it's going to be important where they're based. It's important the metrics and how fast they're growing. So to me, this is just a regular, one of the risks. The biggest risks are that those going to fail, that the market is going to fail, that the competitor is going to take over. The risk of them being based in a country at war, it's a risk. But to me, it's actually a smaller risk than all of the others. So but if not for if we had different LPs, if we had different structure, maybe it wouldn't work. And I see a lot of VCs are currently scared of doing anything in a country at war.
I'm curious, Boris, just as a question, do you have like an overall metric for your portfolio that says how much of the the revenue comes from, if you say in your Ukrainian startups, how much of the revenue come from Ukrainian customers?
I mean, I would obviously ask those questions, and in case of FinMap, it's about 60%. It's been going down actually because it was like 80% before the war. I would in most cases I wouldn't invest in a startup that has just one source of revenue just from one country. Not because diversification is one thing, but the fact that they have to prove that they can actually scale globally, that's the important part. So when we started discussing with FinMap, they were mostly Ukrainian startup. But then once we kind of got to the discussion, like what their plan was, they already started expanding to countries like Poland, Spain, Turkey, even Africa. And once they showed repeatable sales in all of the other markets, we felt more confident and started hiring more people in those markets. We felt more confident that this is a repeatable business, not just a business that's going to work in one specific country. A lot of those businesses are just those kind of businesses that just a leader even in a small country, but it's so hard for them to scale globally. So we need to make sure that this is the case. And if it is the case, if I have a belief that they can grow to be number one in a number of different countries and become a huge company, at least on a European level, it's a go for me.
Yeah, absolutely. Okay, so now I want to get back to our topic of today, which is really here I'm writing the style, but it could also be the approach, right? And what I have done for us is I've collected some of Boris's stellar content that he puts out on LinkedIn.
I'm scared already.
Almost daily, I'd say. And I want to start, and I've used then a keyword to kind of say, what is it that this post shows us all about Boris's way of thinking, but also about what I believe at least is the best practice / American approach to venture investing. And here's a post where Boris says that he shares with every founder that reaches out a deck on SMOK. And I think that this is just to give the overall point that there's a part to be said about transparency. And Boris, I'll now ask you to tell us about transparency in your world, so that our audience can hear exactly why is it that transparency is a hallmark of SMOK and your approach to investing.
So part of the reason I do that, I share a deck of SMOK, is for the conversation not to be one way. Like the most amazing founders always choose the investors that they want to work with. So it's completely normal for me to pitch and for them to pitch. And then if both kind of work, if we like each other, if we feel we can work together, it's a match. I would hate that relationship when there is, a founder asking for money and me kind of, deciding whether or not to invest. Usually that would be even a good investment. So part of that is just business. Like I want them to feel that we are equal partners, or like usually the founders are just way more experienced and better in general. They're gonna make us money, so we need to be nice to them. And transparency, like there's a lot. Like I've been told by so many people in the past that I'm a bit too open, a bit too honest, and a bit too like I trust people too much. And frankly, like I know there's people who get burned by that. I've been burned maybe a few times, but at 95% of cases, it worked to my favor. So I just keep doing it. So I just assume usually that what you're doing is good and what you're saying is true. I'm gonna do my due diligence, of course, and check that at some point. But like, I don't want to assume, that someone is trying to, to do something harmful to me. Is I also want to make sure that they understand that's our approach and that's how we treat the founders. That I want to both in like founders that go to us, but also investors that go to us. I try to always say the worst thing. Like to founders, I say, guys, if you want to have someone who's a coach who works with you every day, that's not us. We don't have time for that. Like we need you to really know what you're doing. Like we can help you specifically in specific times, especially fundraising and connecting you to the people outside of your home market, because we're really well connected there, and we've proven that we can actually do it and help founders fundraise. But we wouldn't be really your kind of day-to-day advisor, because we're not that kind of investor. Like you can get really good, smart angel investor who has only 2 or 3 investments and help you in that. With the LPs, I also say them like, hey, like if you're probably not like, if you're like worried about liquidity, if you're worried about risk, you shouldn't be investing in a VC fund. I just told it to my friend who invited me to lunch recently, and he was like, hey, I want to work with you. I want to put some money to your fund. Like, how much money do you have? And he's like, 100K. It's like, and how much would you want to put in my fund? I was like, maybe half. I was like, are you crazy, man? Like, that's insane. Like, you should never be doing that. And he's like, you're saying that. That makes no sense for you. He's like, I want to keep being friends with you. At some point you will need that money. And if you never invest in VC if you need that money. You only invest the money that you don't need. So I think that helps. Like we scored a few LPs. Diana scored 1 LP. And the reason he invested was that she answered to his question, so how much can I make? And the first thing she said is like, first of all, you can lose everything. And then it was okay, that's nice, that's transparent. Like I didn't expect that, but it's good to just have those disclaimers. Otherwise you could get in trouble.
And I absolutely agree. And I cannot say how many times I brought you on for to talk about this exact topic, because I think that's exactly what you carry around with you, and the way you talk to these things, and any topic that you might bring up. I can always count on getting the truth from you, whether it's right or wrong. I don't know, right? But at least I know that you're going to say what you think. And that gets us to the next point, which is also your bluntness. And if there's anyone who have ever met US VCs, they would also know that it's also quite blunt answers that you get. And I'm pulling up here one of your posts as well that says, if you're a Russian and you pitch your startup, it's not a good idea to hide being Russian by removing any Russian references from your LinkedIn or deck, or pretend to be Ukrainian. And then you're saying, what the fuck? Simply state where you're from and what's your stance on Putin, the war, and move on. That is not because I want to jump into the rabbit hole of the war between what I hope is going to be the West and Russia, but rather to say there's something to be said about bluntness, and I think that you are really good at walking the thin line of being transparent and humble and fair with people, but also being blunt and saying what needs to be said. Please feel free to share your reflections on this part of your characteristic if you want to.
It also works on LinkedIn. You get more likes. So
controversial. Does it work with your wife?
Sorry?
Does it work with your wife? Because it doesn't in my household.
Oh, no, it doesn't really. No, it's to be a bit more less straightforward, a bit more diplomatic. No, true being said, like, I wouldn't share something that I don't agree with. Sometimes I exaggerate a bit, but that's for, I like bringing conversations, and I don't like offending people. So like sometimes I just go too far, and then I have to like explain myself what I actually meant. I have nothing to do with, I have no problem with Russian founders, as long as they don't live in Russia. I cannot invest in Russia, and as long as they tell me what side they're at. If they do, I'll be okay investing. But I need to do more due diligence.
My point is here with bringing up the Russia topic here is that is the one very clear thing that many beat about around the bush with. but when you have someone who as you, who is willing to say exactly how you see it repeatedly, that also goes to show that you will be that person in any circumstance. And I think that that's incredibly worthwhile and something we should definitely all optimize for in our relationships with VCs, whether we're founders or LPs. Then I've put another slide here, which is that you are personal in your team. Everyone,
It feels
both
like a
you and
commercial,
Dan.
man. I don't know what to say, but you're really well
You're,
prepared.
I really always enjoy the fact that you guys are sharing, you're open, that you are taking us on your journey, both as us as LPs, but also others just as followers of SMOK. So I really like that part, and I won't ask you to tell us too much, but
This
I
is the
think
true
that what
story,
we're,
by the way. This is like
I think that,
exactly a true story what Diana said.
yeah.
So.
Exactly, and I think that that's exactly what you'll also see in many of the successful US VCs, that there is a persona and personality that everyone in the VC ecosystem is quite open about, even though of course it's also a marketing scheme, of course it is, but at the same time it is also about, showing who you are so that people can optimize for being with the people that they will actually be a fit with.
Yeah, exactly. Like, it's make it easier. Hopefully, like a lot of people would like see a rainbow in my on my LinkedIn, and they'll be like, "I don't want to talk to this guy." Like and that's great. At least we save ourselves some time. And I've seen the other way. I've seen one company we've just accepted to Reactor X, and one of the things that I learned is that actually like made it easier for the team to apply because they felt it's just it just fits their there's so many VCs, there's so many investors, that there's so many founders, everyone will find their fit. So it just works to my favor to announce it
Yeah.
more open than maybe others.
Yeah. I couldn't agree more. Then there's another thing, which is, and I'm putting this, and I know that we're doing this under the name of the American approach to Eastern Europe. That, being US, it doesn't necessarily mean that you're founder friendly, but it's definitely one of the characteristics that you have in your firm. So I'd love to ask you to share a few thoughts about that, and how you think that both LPs and also founders and any stakeholder in the industry can kind of think about that.
I think it's just easy to be founder friendly when you're investing pre-seed because you're investing mostly in people. You're investing in people who are cool, who like, who need to kind of have this, they need to like you, need to like them. Otherwise, you won't be, you won't survive having those board meetings with them every few weeks, and you won't have the willingness to work for them when they need it. Like you need to be not necessarily friends, but at least you need to be on the same terms. So I think it's just the later stage you invest, the harder it is, because then you kind of have to be looking more and more into the numbers, and the numbers kind of define whether or not you're gonna be investing. And the earlier you invest, the closer you are to you're on the same page with the founder. Your success and the founder's success usually means the same thing. So I think I'm just playing in the safe kind of early stage investing, where it's just easier. That we usually conspire against the later stage VCs sometimes because they have a very different goals already than we do. So
I would say, I would say that I don't actually agree, because of course you're right to an extent, but there's also definitely pre-seed investors that are not playing nice.
oh yeah, the
That,
assholes, yeah.
and and I think that's actually my next slide, which is,
Oh
you've
yeah,
done
that
this
guy.
post that many many looked at for a while, that said how to stop being a jerk as a VC in 10 simple steps. And we don't have to go through all of them, but I think that that's the exact point, right? That in venture you have many good opportunities to be a jerk. And you really want to optimize for a VC that you feel 100% comfortable is not going to be a jerk. Whether that is a jerk with your money on your behalf, if you're an LP, or if it's being a jerk against you as a founder. But
You'd be surprised. You'd be surprised, Andreas, how many people reach out to me saying, referring to that guy on that picture is like, oh, did you mean? And then they name a specific person in the Polish VC ecosystem. Like, no, not this guy, but yeah, he kind of fits the fits the description as well. And there's so many others like, they're trying to guess who this is. I'm not gonna say, but he's still active.
No, and the whole point is that I think we have them in all ecosystems, right? At least I've seen it in the Danish ecosystem just as much, right? Obviously, there's also a sophistication level, being that I think that the better the founders are, the more seasoned they are, the stronger the founder ecosystem is, the harder it is to be a jerk, because there's going to be more people talking to each other. There's going to be more power on the founders side. There's going to be founders funding each other. So in that sense, in a more developed ecosystem, you will more quickly get to a point where you don't have as many jerks, but for sure they're everywhere. So I think that anyone listening to this or watching this, for sure go read that article and see if you can learn how to spot a jerk. But Boris, do you have any final remarks to this part?
Well, for the jerks, it's just the worst type of a jerk is a jerk who's a successful jerk. So a jerk who actually made good investment decisions and they actually made a lot of money to their LPs and they keep raising new funds. And even the fund sometimes has a good reputation as a fund who, backs great companies. So that's the worst type of jerk, because you can end up, in a good faith, you think, oh, this is a great fund. And there's so many of those American funds that are, fit that description as well. So I would say for founders, someone who is a jerk to me could not be a jerk to you. So it's really important that you just really get to know your investor. Like if someone gets you the money, it's just one part of the process. You really need to be 100% sure you want to take money from that person, because you're going to be stuck with that person for 10 years or so. And just make sure they're not a jerk to you.
And I can only say the same thing to anyone considering investing as an LP. I'm not giving my money to big oil for the same reason, right? And I'm not going to give I hopefully won't give my money to a VC that will be pushing around founders just because he or she can, or all other types of inexcusable behavior. So for that reason, I think that it's really the truth on both sides, that you should do your due diligence on the personality level as well, to make sure that you get the right fit for you. And this was the ending of our session with Boris on the American / just the SMOK approach to investing in Eastern Europe. And I hope that all of you listening and watching this could see exactly why it is that we at EUVC have fallen quite a bit in love with Boris and his team at SMOK Ventures. So thanks a million for tuning in, everyone.
Yeah, thanks for backing us as well. Thanks for the invitation.
Of course.